on paper, we have seen a massive increase in the valuation of homes. But the reason we titled today's show is rates are up, look out below, is because there are signs now, there are inklings that the market is in the process of shifting. Now, does that mean I'm telling you we're going to crash next month? No, I'm not saying that. Okay. Does that mean we're going to see a massive reduction in property values in the near future? No. What it does mean is that the buying power slows for the average buyer looking to buy an average home when they can no longer buy the house they want to buy.
Check, 1 2 1 2.
Turn it up.
Welcome to the Foreclosure Deals Coach podcast.
The tides are turning. The time is now.
Your home for the mindset, methodology, and tools needed to invest in foreclosures.
Don't you dare buy a house. Buy a deal. You need to get into this right now.
Yeah.
And now your host, the Foreclosure Deals Coach, Donny Corum.
Hello, and welcome back to the Foreclosure Deals Coach podcast. I'm your host and Foreclosure Deals Coach, Donny Corum, broadcasting live from our recording studio in Colorado Springs, Colorado, with my man, executive, and all-around badass, Mr. Jonathan Winston.
What is going on, Foreclosure family? It has been way too long. Let me go ahead and, be real with you guys. Usually, Donnie's a busy guy.
I'm a busy guy.
He's got, a lot of things going on. So we're, obviously he's the talent on the show. So we kind of got to work around his schedule. And, this is not blaming or anything, but sometimes, things, new flips, a whole bunch of stuff pops up and we don't have as much time.
Yeah.
This time, I will say that it's been the executive producer that's kind of had to, be a little bit removed and, just kind of responsible for the time off that we take. And so, I know that I'm the producer, so I apologize to you guys for us being gone so long, but I'm so happy that we're back and, we're about to kill it and keep it going for you again. So let's get it.
Let's do this, man. Let's do this. Yeah, I'm so excited to be back. It has been a lot going on, man. First quarter here in the Colorado Springs real estate market we are based out of has been absolutely crazy. And as we record this, and you're going to hear this on a different date, but we're recording this on St. Patrick's Day. So hoping we get lucky.
Pass me that green beer.
You have green beer in the studio?
It's in a flask, man.
It's too late now.
Oh, wow.
All right, let's move forward. All right, listen. So today's title, rates are up, look out below. Now, did I say this? Did I say this is going to happen? Did I say at some point that rates were going to increase?
Here he goes.
I'm just asking, before we get my ego all inflated, where there's not like 2 years of shows where I said at some point the Fed is going to have to increase the reserve. You know what's funny, though? It's like a broken clock. Like I'm right twice a day.
The squirrel has officially found his nut.
Squirrel found his nut, right? So I knew it'd be right at some time, but here we are. The federal interest rates have officially gone up. It obviously it's fluctuating, so by the time you hear this, it could be an entirely different number, but we're talking about a half to a full percentage point increase. It's been going up rapidly, and let's explain why, okay? Inflation is running out of whack. Last year, this time, I checked right before we recorded, the median price of a home in Colorado Springs was $460,000. Okay, that was last year. We're talking 365 days ago. Today, the median price of a home, same town.
Same
houses. Okay, they didn't change. They didn't start putting gold-plated roofs on the houses. They didn't put helicopter landing pads, some kind of addition. But today, those exact same properties are going for $550,000. And that's crazy for Colorado Springs. But there are other markets where that's low by comparison. Denver's average, just 60 miles to the north here, has gone up almost $200,000 in average. Okay, we're talking from the mid-fives to roughly $700,000 a median price home in the Denver market. And Pueblo, not known for being one of our favorite places in Colorado, okay, has gone up by $50,000 to $70,000 in that same amount of time. Okay, so what we are seeing is exactly what I've been saying is going to happen if you continue to leave rates low. The buying power of the buyers is far too high. The net result is people are paying more for property. Now, is this a bad thing? Well, not if you own houses. right? If you're already a real estate investor, if you already have a series of rental properties, you just own your primary home or whatever your real estate story is, if you're already in the game, this is great news, is it not?
Yeah.
Your property values have gone up. You have made money on paper, mind you, because you don't actually make the money till you sell the house.
Right.
So don't go bragging to your friends that you're up $200,000 in equity because you ain't got it till you sell it. That's fact.
Yeah.
Okay? But on paper, we have seen a massive increase in the valuation of homes. But the reason we titled today's show is Rates Are Up, Look Out Below, is because there are signs now, there are inklings that the market is in the process of shifting. Now, does that mean I'm telling you we're going to crash next month? No, I'm not saying that. Okay. Does that mean we're going to see a massive reduction in property values in the near future? No. What it does mean is that the buying power slows for the average buyer looking to buy an average home when they can no longer buy the house they want to buy. A great deal of them, and we know this from years of experience, will start to rent instead of buying. Now, Colorado Springs is reacting to that fact. You are seeing multifamily homes popping up like wildfire all over the city, okay? And we're not talking cheap apartments, bro. We're talking $2,000, $2,200 a month in average rent for a 1 to 2 bedroom apartment in a nice area. But on the upside, you get a pool.
I mean, we're in Colorado. You're not swimming in that thing right now.
So you can't use the pool? That's whack.
Maybe a hot tub. Hopefully they got a hot
I don't think
tub.
they're doing that. I don't think they just hit the pool. Should have thought that through. My point is this, okay? And I know we talk about this a lot. It seems like it's repetitive, but the idea, I need to drive this home to you would-be real estate investors out there, okay? The time to get into the real estate market was actually yesterday. But since we can't go back in time and make you do that, the time to do it is right, absolutely, positively now. And I'm speaking of the Colorado Springs market because it's my home. It's where I know what the market I'm studying mostly. But I can run this analysis across the country and get the exact same results. We just talked to a guy based out of Nashville, Tennessee, who's saying their median price up 30-40% from last year. Okay, which is insane. On any market to move that much in a short period of time is just not good. Okay, and although it's good if you're an owner, it's not good overall. So how do you benefit from this? How do you get a gain from this massive increase? You get in the game. Right? If you can find a deal in the market, and I have to stable that with deal, if, right? Because it's very difficult to find deals right now. Now, we're not having as much trouble as other people. Anytime I tell people I'm a real estate investor, I'm a flipper, we did 47 deals last year in the Colorado Springs market, 40 the year before, and we're tracking to 60 deals right here in 2022. They go, well, there's just no deals out there, right? Wrong and incorrect. Okay, the deals are there. They're harder to find, and you must be able to move quicker than ever before if you have any shot at getting a deal in this marketplace. If you're the type who has to do a lot of research, analysis, number crunching, you're probably not going to make it in a market that's operating as fast as this current market is operating. Okay, you have to be impulsive. You got to act quickly. Now, that's tough if you've never done this before. And I don't want to turn this to a long coaching pitch, but one way to assist in that is to have somebody with you who can advise you on how to make the right move quickly in your local market, who can evaluate this without emotion and coldly look at it and go, here's the numbers, here's the buy price, here's the sell price, here's what we're thinking the rehab is, and then be able to make a quick, relatively impulsive decision. You can still find deals in this market if that describes you, but if you need to do a ton of analysis, this ain't the game for you to be playing right now. Does that make sense?
Yeah, man, you got to move quick. What I'm seeing, even with me looking to, put contracts together and, source them to different investors or bring them over here to you. It's already been an hours game as far as, hey, I need to get in here and, view it and look to put an offer in, but it's even faster now. And if you are any type of shaky with your funding or, getting the earnest money in or anything like that, that investor is already moving on to somebody else who can get it done. So
absolutely. So what's the look out below part? Rates are up, look out below. Well, here's the upside to this. As the market starts to slow, we're not even going to say fail. I was looking for a word there, but the market starts to slow down. That's going to mean more, not less, but more opportunities for would-be investors who want to enter the market right now. Because a lot of people are going to want to get out of these properties before they proceed the bottom. You have to remember that interest rates impact the retail market first. There are two markets in real estate. The retail market you're quite aware of. You can hop on the MLS, you can go on Zillow, not that we use that word around here because the Z word is not allowed, right?
Gross.
You can hop on any number of sites and see the retail market right now and know exactly what's going on. The wholesale market on the flip side of that is run mostly by wholesalers, people who are trading direct to seller, people who advertise to motivated sellers throughout the marketplace. That market does not get impacted as fast as the retail market. Okay, why is that? Well, the reason is we were already selling below market. We're already good deals. What's going to happen, you're going to see as there are more deals available, the margin, and I know y'all wholesalers been killing it out there, right? I go to the wholesaler groups. I've seen the message boards. I know y'all are knocking out of the park, making 20, 30 grand out of the park, right, on a wholesale fee. It was a good run, was it not? But I can tell you, there's going to be a different spread for wholesalers going forward, okay? And that's going to push a lot of wholesalers out of the market because some of you all got spoiled, you know? I can also tell you that when I was wholesaling, it sounds like it's turned into like when I was a boy.
Yeah, did you walk 2 miles
uphill,
in a snowy hill
right, yeah.
and things like that?
When I was a kid in wholesaling, 5 to 7, 10 grand was an awesome day at the wholesale office.
Hi, this is Donny Corum, your foreclosure deals coach. It's important to have good credit when you're buying a foreclosure. A lot of people think you can come in with bad credit, but the fact of the matter is you need pretty stable credit scores to buy a foreclosure deal. So how do you find out how to increase your credit? Well, there's tons of credit repair agencies out there and multiple formulas, but one thing we found that works is reporting your monthly rental payments to the credit bureau. We partnered with rentreporters.com, the leading provider of adding your payment history direct from your landlord onto your credit bureau scores, and it's helping people to boost their scores up to 40 points in as little as 30 days. So to get started, I want you to head on out to www.foreclosuredealscoach.com. Now that's a messenger bot, and you're going to use the keyword rent to get more information about Rent Reporters and how you can boost your credit score by getting your rental reported to the credit bureaus. Once again, Donny Corum, your foreclosure deals coach. Check it out.
Right? But that has changed. It has changed where the expectation of the wholesale market, because the deals are so juicy right now, because the gap between the wholesale market and the retail market is wider perhaps than it's ever been in the history of the real estate market. Okay, all of these are good things if you can see past the crisis that's going to be purported by the press, the media, the mortgage brokers, the real estate agents. Everybody in the retail market is going to start yelling at you, the sky is falling, look out below. You're going to hear that more. I heard that more times in 2008. And to be honest, young man in the game at the point, didn't know what was going on, did not have the Foreclosure Deals Coach podcast to guide me through this. I panicked. I went out and got a job. I know. It hurts me to say it, much less to have done it, right? Because I believed all that noise when the reality was the opportunities are coming. Not that they are gone, but rather they're coming. You might be making less per deal, wholesalers, but there's going to be a whole ton more deals available to you. Right? And people are going to be jumping ship on houses, figuring that the house they could have gotten 300 G's for, that they still ain't fixed up, still got the pink tile in the kitchen, still got all the same problems. They're now getting $50,000, $60,000, $75,000 more for it. It's still a crappy house. Ain't nothing changed about that. Okay? But it's now a crappy house with a much higher basis when it's a much higher ARV when it's done. Okay, and as a result of that, the opportunities are greater now than they have ever been. I am so excited for all of you out there listening to the Foreclosure Deals Coach podcast. All the people who have been loyal listeners for years now. This is our time, people. Yeah. You need to understand all this stuff I've been telling you about. The market's going to go down. Things are going to suffer. I think our first show, I alluded to the fact that rates had to increase from the 2 or 3% rate they were at the time. That was like probably our first show 2.5 years ago. Okay? And now it's happening. And I'm excited. My operations team has never been more dialed than it is right now. My wholesaling team, featuring Jonathan, who brings in wholesale deals, Gabrielle Simmons, the rock star, the queen of local wholesaling here in the Colorado Springs marketplace. We are more prepared for a crisis, quote unquote, than we've ever been. I say, bring it on.
It's all about who you align yourself with and what you did when everybody thought everything was smooth. Were you acquiring new skills? Were you adding stuff to your bag? Yeah, exactly. Or did you just rest on your laurels because everything was coming to you really smooth? Because now, if you've got those partnerships, if you got those investors that are buying consistently, if you've got a good marketing system and a way to get in touch with sellers, you're going to be able to kill it, man.
Dominate.
You're going to be able to do it.
I know of wholesalers doing 20, 30 deals a month right now, man. Like, if they're making a minimum $5,000, think about the money these organizations are bringing in for not flipping properties.
Right.
Simply providing a source to investors right now. 20, 30 deals a month. Right? It's possible. You're capable of it. Now it's just a matter of putting some action items in place. So what to do first? Well, let me tell you. Okay, I know virtual wholesaling took off, and honestly, that's a sign when you don't need local market knowledge to make money in wholesaling. That's a sign that things are off. Okay, because one of the things we provide as real estate professionals, that real estate is fundamentally a local business. Location, okay? But if I'm you, and you heard it here first, okay? I wouldn't give up your virtual wholesaling. If it's working, keep that going. But I would tell you, I'd start focusing in your own backyard, because the best deals are right there in your neighborhood right now. You need to understand, with very great understanding, what your average median price of a home is in your marketplace, and you need to get very, and I mean extremely good at doing valuation on properties. Because nothing irks me more as a cash buyer investor, and I'm your dream come true as a wholesaler. Am I not? The guy you can find a deal, and then 3 days later you're picking up your wholesale fee, 10, 15 grand. I can't tell you how giddy Gabrielle is every time she picks up a check. It's like taking a little girl to the mall. It's preposterous. Right? I go, why are you so happy? Because you're doing all the work and I'm getting all the paychecks. Like, thanks, Gabby. Love you. Know your market, bro. Know the game right now. If you're not already a subscriber to PropStream or some kind of valuation software, you better get hooked up on that, right? Make friends with agents. Make a lot of friends with agents. Agents who have been the fundamental, let's just call it what it is, the bane to the existence of the entire real estate market, forming into this behemoth by funding this awesome monster called Zillow, are now going to be the critical element in the success of the wholesale market, not the retail market. Because if we're being honest, appraisal gaps, everything that's happened recently, pushing prices to unheard of levels, past the actual value of the property. People are overpaying by 20, 30 grand. And who's driving that momentum? None other than your local real estate agent. And I'm not saying it's their fault. Okay? That's the market. I'm saying they're pushing it. They're driving it.
And they just don't know how to find deals like our investor-focused real estate agent.
And furthermore, they turn their nose up at them. When they see a deal, they go, this house is ugly. Nobody would want this. I want it. Right? The uglier the better. I want it. Send it to me. So if you're an agent in Colorado Springs, Pueblo, or Denver, you're looking to do deals. We've not been moving much property in Denver, but I know some wholesale groups who will remain unnamed who are doing 50, 60 deals a month at the Denver market. So the deals are there every single day. I hop in my email, got another one. Not that I'm not happy for them, just that I'm not happy for them. The inventory is moving, guys, and the wholesale market is now taking control a little bit. Rates are up. That was the leading indicator of the start. Now, what's going to be the full catalyst that's going to push this into a full foreclosure-based market? I still have no idea. We thought it was coronavirus. Didn't happen, right? We're now potentially going to war with Ukraine, or not with Ukraine, to help Ukraine against Russia, right? Could that be the catalyst? I don't know. To be honest with you, war is economically good. So that actually might be beneficial. A lot of people are going to get good jobs. Defense contractors are going to start employing heavily. The military is going to staff up. So Is that going to be the catalyst? I don't know. What's coming for us? I can't tell you. All I know is the combination of the increase in rates that I predicted long before it happened. Again, a dartboard logic. It had to happen eventually. And whatever this other catalyst is going to drive a great deal of foreclosure in the market. Okay, and that day is coming. You as a real estate investor, as a listener to the show, have got to figure out how to get your valuation models set up, your construction team set up if your desire is to flip, or if you're going to continue this wholesale, you better make good friends with your local neighborhood cash buyer. Take that guy out for a beer or gal. Go get some coffee. Find out who's going to buy these houses, because I'm telling you, it's coming. The wave is shifting. I'm feeling it, and I don't know if you can tell the excitement in my voice, maybe because I'm holding back a little bit. I don't know if I'm delivering, but I'm telling you it's changing, and we are loving the ride. Okay? So if you want to get started, you don't know how to do your first deal. You can't find the funding. You can't find the deals. You don't know how to start marketing. You need to get some help, man. Like, obviously, you got YouTube University, hours and hours and hours of data out there on how to get started. I don't want to hear from anybody. I don't know how to get going in this game. That's ridiculous. The amount of information that's been produced in the past few years about wholesaling and flipping, etc., is excessive. It's all out there. If you really want some hand-holding, you want somebody who can walk you through your first deal, I would be honored, privileged to be your coach in the foreclosure, flipping, or wholesaling market. We are now actively taking coaching students throughout the year. We are building the coaching system out. We want to get students all over the U.S. We're looking to change their lives and take advantage of what is going to be the greatest market in the history of real estate. Check out the new website, foreclosuredealscoach.com. Get out there, register for a strategy call with Jonathan Winston. You're going to get to meet.
It's me.
You're going to get to hear the sultry sounds over the phone, and then if you qualify for a coaching program, if you've got the drive, the determination, if you want to be part of it in your local market, and I can't BS you, change your life. Okay? Because this is the kind of wealth shift that creates seven-figure net worths all of the time. We saw it in crypto. We've seen it in the stock market. We've seen it in real estate a couple of times, and we're about to see it again. Now is the time. This market is the place. It's finally happening. I certainly hope you'll be a part of that. Are you all amped up right now? Like, I'm shaking.
I know
from
I am,
excitement.
man. It's been, like I said, it's been a minute since we did one of these, and we can't take that much longer. We can't take that long off anymore, because I'm juiced right now.
It's time to hit hard, baby. So go out to foreclosuredealscoach.com, register for a strategy call. And listen, I don't take everybody. I'm going to shoot straight with you, okay? This is the anti-sales pitch. If you're kind of dabbling, if you're not sure this is for you, right? If you're kind of contemplating, don't get coaching yet, right? When you're all in, we want to be part. In the meantime, we've delivered so much knowledge right here on the Foreclosure Deals Coach podcast. Where to find motivated sellers, how to hop on and get leads. There's so much data out there already on this show and everywhere else. Just get started. Take the first step. Go find your first deal. But if you want some hand-holding, I'd be honored to be a part of that and become your personalized Foreclosure Deals Coach, help you through your first profitable deal here in real estate. And that is our show for today. So as always, I thank you guys so much for tuning in. Keep going. The time is now. The market's shifting. Become a part of it. We're happy to have you here. We're going to be much more consistent with the shows. We're going to get back on schedule, and we're excited about that. This is Donny Corum, your Foreclosure Deals Coach. Thank you so much for tuning in yet again and reminding you, don't buy a house, buy a deal.
Want more of the Foreclosure Deals Coach? Hit subscribe and stay tuned for more of the mindset, methodology, and tools you'll need to invest in foreclosures. Visit foreclosuredealscoach.com and text DEAL to get a list of foreclosures in your area.